effectively DeFi has the infrastructure. It has also the capital. They can move faster on a smaller startup scale compared to big financial institutions. And that is why I think it's a massive opportunity for DeFi and Aave specifically. It's an opportunity which is between 15 to $50 trillion.
This episode is sponsored by Canton, the only public permissionless blockchain built for institutional finance. We'll hear more from Canton later in the episode. Blockworks Digital Asset Summit is back in New York, March 24th through 26th. We'll have top speakers from leading asset managers, financial institutions, DeFi protocols, crypto companies, and policymakers all under one roof. Think BlackRock, Coinbase, Robinhood, and more. Follow the link in today's show notes to buy tickets and make sure to use code BELL200 for $200 off at checkout. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. Today, I'm joined by the man, the myth, Stani Kulechov, the founder at Aave Labs. Stani, welcome.
Thanks for having me here, Michael.
Yeah, this will be fun. We're talking about a month out from DAS, so I'll see you in person in New York soon as well. Are you spending a bunch of time in New York these days? What's your there's like this theme about the institutional pull of New York, but how much of your time are you spending there?
Quite a lot, actually. I'm gonna be in New York next week, so yeah, and quite a lot. There's a lot of institutional demand at the moment. RWAs with what we're doing with Aave Horizon, that has a lot of connectivity there. So I'm really excited about that because I think now than ever before we have the highest institutional interest at the moment on chain. So I'm super excited.
You know, I gotta be honest, we talked about this at and this will segue into what I would love to start with is this this blog post that you wrote, Aave Will Win, as a jumping off point, or a funding abundance actually is the title of the blog post. But you know, I've been saying this a couple times at DAS over the years now, that there's a real divergence in between. There's always been kind of the crypto native side of crypto and then the institutional side, and the sentiment divergence is so wide at the moment. I mean, people in the crypto native trenches are not doing quite so hot, but on the institutional side of things, stuff is just flying. And you must see that firsthand from your seat at Aave Labs. But yeah, what does it feel like on the ground talking to some of these more institutional players?
No, and I think like on the native crypto side, you know, like for example, DeFi has grown like significantly, and if you look at, for example, the growth that Aave, for example, has had last year, we peaked at 76 billion net deposit, 30 billion outstanding borrows, and most of that was basic native crypto. So growing as the native crypto assets are growing, but in the context of RWAs, we're extremely early. So DeFi has peaked to 220 billion. It's now 120, and when we look at the RWA market cap, that's 25 billion. It's very early, and it feels that every institution that we're talking to, bank, asset manager, fintech, anyone who wants a stable coin, commerce, there's this sort of the trend that every institution is having their own digital asset team. Some of these banks and asset managers had that for years now, but now it's becoming like almost like a table stakes, actually.
I completely agree with that. And maybe this is a good way to transition into this blog post of yours and this new massive $30 trillion market that you're attacking. So the title of the blog post that you wrote is Funding Abundance. And you started the blog post by kicking off your perspective on the state of the union of DeFi and what the bottleneck is in general, which is kind of on the demand and the capital side. But before you get into the opportunity that Aave is attacking here, can we just get a sense of, state of the union, what's working, what is the bottleneck that still exists? Like, how are you thinking about, especially the borrow lend space in general these days?
Yeah, what we did extremely well in DeFi, looking at the past few years, is that we sort of were able to create this very efficient capital allocation layer. So um, LPs and allocators, any part of the world, can actually create strategies, allocate, whether it's lending or market making or any sort of um, yield or P&L opportunity. And this is very significant because in a DeFi world, liquidity moves in a sort of fluid way. So if there's an opportunity, theoretically it should be captured. So if there's the same risk adjusted opportunity elsewhere or newly created, capital should be able to move there and reallocate. So DeFi sort of fixed this whole, and not just fixed, but made it efficient to allocate capital. Now, where we kind of have more challenges is sort of um, on the demand side. So this challenge actually has come because DeFi has been able to grow so significantly within these crypto assets. So if you look at most of the growth that, for example, Aave has had over the years, and DeFi in general, it's to do with these crypto assets. So lending against Bitcoin, lending against Ethereum, Ethereum looping strategies, and now more recently, yield-bearing stablecoins, which is sort of a new category. But a lot of this growth has happened because of these native crypto assets in the space that's been growing, and now because we have solved really efficiently the capital allocation part, the supply side, we basically need more opportunities, and the opportunities can come by going beyond the native crypto assets. So we're very bullish that crypto assets will going to grow. And I think what we did really well with Aave specifically, we proved that this protocol works really well and it's very resilient. And we battle tested it with the most volatile dynamic assets. So going beyond that, we have to go into RWAs, and that is sort of like the axiom of this whole funding abundance. And when we think about these RWAs, there's, in my opinion, there's like two different categories. So the first category is the ones that fit into this sort of Aave Horizon bucket, where you have asset managers, banks, and they have existing financial products that they're bringing on chain for whatever reason, for existing users, attracting new customer bases, and that provides the ability to borrow against those assets at 24/7 basis. And then for stablecoin supplier perspective, to lend stablecoins on chain against more traditional risk profile instead of against crypto assets. Category one. Category two is this idea of well, what are the assets that are not really traded and existing in the traditional world in these highly liquid accessible markets? What are those assets? And is in this asset category, kind of you find assets that are basically future proof, or in some ways backing the future that we're basically going towards. And when we look at all the innovation that is happening at the moment with smart contracts, with automation, with basically AI intelligence, we see this sort of a common theme of that every person in the planet is going to have some sort of uh, more evenly distributed resources. So AI has proven that really well, that anyone can have enormous amount of intelligence and compute. Then we have, for example, robotics coming. So at some point, there's going to be a limited amount of labor, and then we're going to also move to very cheap, low cost energy, which powers everything around us. And all these categories together create this sort of a future of abundance. Um, and then the DeFi opportunity comes into tokenizing them as assets, and then using as a collateral, and then accelerating this transition to abundance, which going to take up to 2050 or beyond. But by using DeFi, we maybe can accelerate this by 10 to 15 years, because it's starting to become more of a finance problem instead of innovation problem, because a lot of this technology is matured. But to understand, and this is like a one important point, is that to understand the difference between the new and old is that abundance is about this sort of new future, and where we're existing now is based on scarcity. So banks and capital allocators allocate to mortgages, which is real estates, corporate bonds, which is these traditional companies, and also funding governments that are taking more and more debt. So what we're proposing from our sort of vision over the future is that the winners of the future are the ones that can bank abundance um, when we are moving away from this scarcity economy, because in the future you don't care where you live. You can build a lot of infrastructure, housing, buildings very cheaply, easily, any part of the world, and you don't need this concentration of people and capital into cities effectively. So that is whole idea of like what is the funding of abundance all about.
Stani, if I could sum this up and tell me if I'm being too simplistic here, but in the two categories that you mentioned, there's one, some kind of more traditional assets like, yeah, maybe mortgages or treasuries. And these issuers are looking at crypto is kind of a new distribution channel for them. Mostly they're like, hey, and maybe it's easier to get funding or like a loan against it or something like that. But they're kind of well-established category of financial assets. And, you're looking for some of these benefits, distribution, ease of access to capital, maybe lower cost of capital in the future for existing assets. But then there's also this new category. There's all this new interesting and exciting technology in the world. And the growth perspective from crypto is to be able to offer financing and grow alongside, for instance, an exciting new category like solar or, AI GPUs or something like that. Is that roughly kind of the right way to think
Yeah,
about it?
and I think that finance is sort of very connected into um, banking the future, whatever time period it is. So if you go back in time, for example, and look how, for example, JP Morgan became successful, that was funding innovation, funding Edison, funding of electrification. That was basically a paradigm shift for everything. We had the same thing with industrial revolution and railways, where capital was uh, taken from the agriculture landscape and reallocated into this sort of industrial revolution, building factories, and that changed the whole world. And now we're moving towards a new paradigm shift where we're gonna start having unlimited amount of resources, and this transition is gonna take a lot of time, anything between 25 to 50 years, and being able to finance that, um, and who basically banks to this future is are the winners effectively. And I think from like the traditional financial institution angle, they will obviously also fund similar types of technologies, whether it's like data centers, GPUs, and solar batteries, water desalination. So I think it's going to be happening everywhere, but where it can be actually um, who can move really fast on this category is DeFi, because effectively DeFi has the infrastructure, it has also the capital, um, and they can move faster on a smaller startup scale compared to big financial institutions, and that is why I think it's a massive opportunity for DeFi and Aave specifically. It's an opportunity which is between 15 to $50 trillion size, and if you compare that to, for example, JP Morgan has a 4 trillion in asset management. BlackRock has basically uh, uh, three times of more of that. So we're talking about the amount uh, that is significant there, and actually can rearrange the sort of financial institutional landscape over long period of time.
You know what? I'm not sure if but I think something that a trend that benefits DeFi with some of these new technologies is that for the first time in a long time, these are asset heavy or balance sheet intensive investments that companies are needing to make. Like if you just look at the capex from the hyperscalers, it's crawling up somewhere around $700 billion a year. And I saw that JP Morgan just released a new framework for stocks, which they're calling HALO, and that's heavy assets, low obsolescence. So this includes capex and supply chain bottleneck beneficiaries, robotics, and sector staples. And it just strikes me that if you could tokenize this, DeFi is really well suited to this, because historically, the world of lending has been pretty under collateralized, right? But now that there's a demand for some of these harder assets, that you can also collateralize them and lend against them. DeFi is very, very well suited. And I know in your blog post, you call out some of the reasons why solar is a particularly interesting opportunity that's well suited to DeFi. So maybe we could get into, why you're attacking this market. And then I'd love to cascade down into, what levers you're pulling to pursue the market.
Yeah, and of course, the opportunity is incredible. And obviously, at the same time, we're focusing on what is important near term, still growing the crypto assets from our perspective, growing also RWAs that are coming from the traditional world that already are traded somewhere, so through Horizon. So these categories will still grow. The reason why we think solar particularly is really interesting is that one thing about the technology that always follows is the economies of scale. So when you get into a certain point where the prices of the units are dropping significantly, the asset becomes more and more investable. And solar particularly is a low-risk technology, but at the same time, it is heavy on the capex and extremely low on the opex. So it sort of is a perfect asset for financing, because you need a lot of upfront, but then once you clear the upfront, you have a very simple sort of operational profile. And if you can use something like Aave, where you can tokenize this asset, even to a sort of portfolio where you have a lot of diversification of solar farms across globally, you can start actually borrowing against that collateral and expand that leverage and reinvest and build faster solar. So there's incredible benefits there as an asset. And I think the same model will also follow with batteries. I think batteries are 10, 15 years sort of where solar used to be. And that is why it's super interesting. But what it also does for Aave's sort of technological distribution perspective is that Aave is building the Aave App, which is consumer-facing app, Aave Pro for the sophisticated DeFi users, and Aave Kit for enterprise and fintech integration. So what it allows us to do is that we are able to create, in some ways, opinionated yield, opinionated financial products that we're comfortable to know that these are the resources that are needed to bank the future and distribute that yield all the way to across all the user bases. And why it's important is that today all the financial opportunities are very commoditized, and there are in between categories of lending for governments, lending to basically financial institutions, or allocating capital into mortgages, funds, in sort of that scarcity economy financing model. And this provides something new and also uncorrelated within the existing financial system. That is why I think it's a really interesting hedge compared to what exists today.
Before we get back into the episode, here's a quick word from our sponsor, Canton, the only public permissionless blockchain built for institutional finance.
TradFi wasn't built for 24/7 markets. DeFi wasn't built for regulated institutions. But Canton is where the power of finance meets the promise of blockchain. The only public blockchain with institutional-grade privacy, true composability, real assets, real markets. Why reinvent finance when Canton makes it work the way it should? Canton, where finance flows.
So, can we get into the Aave app as well? And I'm very curious. Like one, observation of mine over the years is a lot of the DeFi 1.0, which the Aaves of the world, the Uniswaps of the world, are still kind of have much better longevity than like almost every like DeFi 2.0 category, if you remember that acronym from a number of years ago. Hasn't done quite as well. I'm actually curious why that is from your perspective. But another thing that I've noticed is many protocols that started out purely as protocols and as kind of infrastructure backend are moving up the stack and vertically integrating, and that could be anything from like Uniswap launching Unichain, and obviously they have their own front end and their own kind of intent-based trading system with Uniswap X. Then also I'm noticing the same thing with Aave, right? There's the Aave protocol, like V3, I kind of think of as one managed protocol. We'll talk about V4 as kind of a broader, kind of more modular approach to lending. But then you're also controlling the front end as well with the Aave app. And it's almost like this, very almost like a kind of a fintech sort of approach with your own back end. Like how should listeners think about the strategy here with Aave's offering?
It's really interesting because I think that's the way for Aave as a protocol is to succeed is to have a infrastructure that is really widely utilized. And the way we see it, you have to pretty much go into two sort of directions at the same time. So one direction is that you make the protocol as accessible as possible, easy to integrate across the ecosystem, um, existing native DeFi products, fintechs, and for institutions as well. And the reason for there is that unlike like the traditional like a SaaS models, DeFi protocols like Aave, um, when users are supplying liquidity or borrowing a liquidity against a collateral, they're actually reinforcing the network effects of the protocol. What it means is that even if you have multiple different fintechs contributing liquidity, um, and sort of offering almost like similar types of products, they're reinforcing the available liquidity on the protocol, which reduces the withdrawal risks and reduces the cost of capital for borrowers, and that creates more attractive utilization for borrowers. And you can think the same thing other way around. And what we notice is that these integrations are really important, and it's going to happen in the next couple of years. And Aave can be a backbone of sort of all of the financial lending at its sort of best. But at the same time, we have to bring more users and take a bit more proactive stance on actually bringing more users into Aave. And the way to do that is to enhance the user experience so that Aave is accessible to any mainstream user. And to get there, you need an experience where you can download a simple application on mobile, log in with your email or your phone number, and then link your bank account and deposit into Aave without any sort of thinking about wallets or gas fees or any sort of networks. Everything is purely abstracted away while still preserving your control over the funds. And then on the more sort of web interface, we want to ensure the highest possible experience for sophisticated DeFi users that have been in the space since the beginning, and it is also like expanding user group to do more sophisticated usage of Aave and DeFi. So they all kind of like play towards the same direction of increasing the network effects, which benefits everyone. And I think it's the first time ever in fintech or like finance where these network effects are so obvious. For example, another example besides Aave on the lending context is stablecoins. So, for example, PayPal has its own stablecoin, PyUSD. Um, and typically, when you think about stablecoins and inflows and outflows, so if you have an application, a fintech app, and you have outflows, typically that is a loss of business, right? But if that outflow is in your native stablecoin like PyUSD, that is just used in some other application like Aave, um, that simply means that that user is still in the ecosystem of PayPal and generates also revenue for PayPal. So we're moving away from this world of um, sort of like competing competing positioning into more like a compounding network effects of working together and expanding the whole pie, which helps everyone else in the supply chain.
Awesome. Well, I agree with that framing in general, and this reminds me of a kind of a long debate, right, around where value is going to accrue at the kind of app layer or the protocol layer. And there are some analogs, I guess, and just I guess there's no really one right way of answering it, but and to get into maybe the Aave Will Win maybe debate that was going on between Labs and the DAO. You can look at these examples of maybe someone like NVIDIA as an example where you have a software component and a hardware, like two potential lock-ins, right? And you could either, like NVIDIA has shown to give away the software, CUDA, to lock in the GPUs. Kind of similar thing with Apple as well between with their network, the iOS and the App Store and the phones. But you can kind of choose where you want to monetize there. And it seems like the alignment that Aave has focused on and centered around is monetizing at the protocol layer and trying to direct, fees, trying to direct fees down into that protocol layer via the app and being flexible at that layer. Is that roughly the right way to think about it?
Yeah, and it's all also going back to how we structured the protocol economics. So if you look at the way the Aave protocol monetizes today, and that started from AIP 1, where we established that any sort of like a governance is related to the protocol contracts and also the economics of the protocol. So anytime there is sort of a lending and borrowing portion of that uh, 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 revenue goes into the Aave treasury, which is controlled by Aave DAO, which Aave Labs is also part of. And then there's another product line, which is the Aave native Go stablecoin. And obviously, in most cases, there's a 100% margin that goes into the Aave DAO because there's no LP in the main sort of facilitator there, which is higher margin, but also smaller consumption at the time, but growing significantly. And what we notice is that any sort of a product that is being built on top of the protocol that is integrating the protocol increases the economical activity of the protocol. So that can be Aave Labs made products like the Aave Pro or existing interface or Aave App, or the enterprise offering, or it can be another application that is integrated in Aave and uses it. DeFi Savers is a really good example. And typically these applications, they monetize. I'm pretty sure that fintechs that integrate Aave in the future, they will also monetize on the top of the protocol layer. And the exchange that is happening effectively is that they're bringing liquidity or creating consumption, which generates revenue, and that's great for the protocol. And typically, this is how we've also been thinking from the Aave Labs perspective, that Labs simply needs to build products, be self-sustainable, get capital injections outside of the protocol itself, and be the sort of growth entity for the Aave protocol by increasing the usage of these products. Currently, for example, with the Aave interface, we are facilitating probably roughly 80% of the traffic into Aave, and that is sort of a product that we maintain, improve on a day-to-day basis, and keep it secure, and hadn't had any security incidents since the launch in 2020. Now, the Aave Will Win proposal what it really tries to solve is this sort of a component of when you have a labs entity and then you have a token. For a lot of token holders, it's sort of there's a little bit uncertainty of like how value generates into the lab structure and how value generates into the token. And obviously, the trade-off here is that if Labs has its own is self-sustainable and manages its own sort of revenue streams, the DAO doesn't need to pay for any sort of um, uh, any of these products to be developed and the growth of it and so forth. And with the Aave Will Win proposal, what we actually are doing is that to remove this uncertainty, we're redirecting 100% of the fees from the product layer directly to the Aave DAO for the benefit of the token holders. And this is significant. Why? Because it expands the revenue stream of the protocol. For example, now we have integrations for position swaps and swaps in general in the Aave interface, which generates between 10 to 30 million annualized revenue to Aave, which is going to go to the DAO. But most importantly is that it allows Aave Labs to build products and monetization faster than on the protocol layer, which we are also contributing with Aave V4, and capture more revenue. And that's where your example, Michael, where you have this sort of NVIDIA's CUDA and then like the software and hardware is really interesting because it simply for us is an expansion of what Aave could actually earn revenue in the future. And this ties to the earlier discussion of like how Aave will grow beyond the native crypto assets and how we actually create more revenue for the DAO.
And can we talk a little bit about V4? Because this is the more modular, approach to, maybe like the risk is managed a little bit less by the DAO, which is sort of my understanding of like V3, how I generally think about it is. But now, in V4, it's going to be much more modular where you kind of have everything segmented into these different pools, and it's much more flexible for onboarding different types of institutions or borrowers or lenders that might have different needs. Can you maybe explain to listeners, like just give us the kind of the broad overview of V4 and how we should be thinking about that and maybe some of the core tenets of the protocol too?
Yeah, no, Aave V4 is something that we've been designing and building for the past 2.5 years. So Aave V3 is a state of the art. It's basically the best architecture there at that time, at the moment where you can take the architecture, you can deploy different sort of pools. So you can create pools that collaterals don't replicate. You can create all sort of combinations, which is really great. Aave V4 actually approaches lending and borrowing from a bit more like expansive nature. And the architecture is more modular, where we have hubs and spokes that are connected into these hubs. So hubs is where the liquidity is stored. And then that liquidity is given to spokes as a credit line. And spokes have that borrowing strategy. So which assets can be listed as a collateral? What is the sort of loan to value ratio for those collateralizations? And one example of thinking analogy to think about this is that the hubs are sort of central banks and the spokes are commercial banks that have their own lending strategies. So what this allows to do is that typically when we always create new markets in on-chain lending, you have to bootstrap those markets from the get-go. And this bootstrapping has a fundamental challenge where you have to put a lot of incentives and try to grow the pools. And capital comes in, it can be borrowed out, and need to wait for new capital, and it happens in a course of time. Now with Aave V4, that capital needs to be injected only once into the hub. So once it's grown once, you can add different sort of use cases beyond collaterals and connect as a spoke into the hub. So what this allows to do is that it expands the Aave's ability to create new use cases, attract more deposits, more borrowing, and eventually more revenue into the Aave DAO. A great example is that there's a really good protocol named Fluid, and they have this debt trading feature where users can allow traders to trade with their collateral or their debt position, and that generates revenue then that decreases the cost of the borrowing that they might have. Now, with the hub as spoke architecture, we can create a specific spoke that is focusing on this sort of angle. The second example is that we can create a spoke that uses Uniswap LPs as a collateral, and you can borrow Go against that. And a third really exciting example is that you can create a spoke where actually the custom logic, because spokes can be completely custom, can actually be attached to a qualified custodian. So institutional users that have Bitcoin, Ethereum, or other assets in a qualified custodians and don't have the ability to move on chain can borrow directly from Aave. And this is like a significant size of a business basically that can be tapped into. So this modularity is sort of an example how the protocol use cases can be scaled, and the spokes can be built by any sort of Aave service provider or even a third party that basically wants to build a DeFi product and then scale it with the liquidity of Aave.
Got it. Okay, that makes an enormous amount of sense. And is the reason for this architecture here just seems, across a number of protocols. And I read this, every year, Hasu does a Goose update. I'm just, the last one that he did was basically as institutions move into the space, there's a much more heterogeneous demand profile than there has been in the past. And I think that's from everything from liquid staking to borrow lend to trading, right? Like institutions and owners of capital are going to be more regulated, but also, not all capital is the same, right? Institutions are very different. And so you have to have the flexibility to kind of meet them where they're at. Is that roughly the size of it?
I think yes and no. So the yes aspect is that it always starts typically that way. And to enable the maxima of innovation, you have to be the enabler. And that's where sort of Aave V4 comes into play, where basically with hub and spokes, we can launch a more like a dedicated hubs with additional trust assumptions and spokes attached to that, catering institutional usages where you maybe have more risk or a lot of the sort of a due diligence happens off chain and so forth. So that fulfills that type of criteria. The reason I'm also like slightly skeptical is also because not all of the innovation or the requirements will become something that actually gets product market fit. And I think the reason for that is that when TradFi creates products, they have this whole bunch of like restrictions and compliance, and it's just like a really like a big hassle to create a financial product. So once you kind of like are thinking about financial engineerings or these financial products, and you get like sign-offs from all these different departments, you end up with a product that may or may not actually get traction. And the interesting case it might be, but there's also like kind of like the meet in the middle sometimes leads into situations where you don't get necessarily the traction, and then the best thing would have been just to depositing into the most sort of a liquid pools on Aave.
Everyone in crypto loves to talk about transparency, but would any serious business publish its payroll for the world to see or hand competitors its contracts? That's not a feature. That's a bug. And it's why most financial institutions can't operate on today's public rails. Canton Network is different. It's the only public permissionless layer 1 blockchain built with privacy at its core, sharing data only on a need-to-know basis. That's why Goldman Sachs, NASDAQ, and Broadridge are already building on the network. Only Canton delivers the network effects of a public chain with the privacy and control real finance demands. Learn more about Canton by following the link in today's show notes.
Stani, what do you think how do you think in this new phase of growth, the lending activity is going to change in crypto? So, when I kind of think of a lot of the like the Aave initial use case, and this is Maker to some degree as well, is really serving the demand to go long on crypto native assets like ETH, right? There's a lot of, the most, I would guess, vanilla kind of used what was kind of you collateralize your ETH and you borrow stable coins. Now, even if you were to look at the deposits on Aave, I think about 50% or over 50% of the deposits are a mix of USDC and USDT or other stable coins. And I'm just curious, how do you see that changing? It seems like everyone's very excited about RWAs, and that's obviously, with the solar market that Aave is attacking, it seems like that's the direction that Aave is going as well. And I'm just curious, if you had to, if we're having this conversation in 5 years, how, what role or like what percentage of the lending market, or I guess the collateral market rather, are kind of native assets like Bitcoin or ETH?
Yeah, I think the native assets will still keep growing. And for example, I as a depositor were, probably I care about supplying against those assets. The reality is that a protocol like Aave is built to cater whole 500 trillion asset base. Because end of the day, like you can use the same protocol for the crypto native assets to all assets. Um, what I think is going to happen is that the fastest growth is going to happen where you don't need to be restricted by the market capitalization of existing assets. So the whole sort of a DeFi is correlated to Bitcoin loans and Ethereum loans, right? So even when you think about Ethena and that sort of a yield, so going forward, there's going to be more and more uncorrelated like non-crypto correlated assets, and that's really interesting because if you look at Horizon, for example, during 10th of 10th and recent market drops, Horizon, net deposits were exactly the same level because there wasn't any fluctuation. They're traditional assets, effectively, that don't have volatility in their case. So I think from 5 years from now, we're going to see a lot of these traditional financial institutions tokenizing assets, a lot of failures, a lot of wins, good amount of growth. But I think there's going to be a tipping point, and it might be that year 5 or year 6 from now, when the abundance assets will take over. It might happen earlier, depending how many projects are actually working on this. But I think that's where the biggest opportunity is because the abundance assets are underfunded. They're not traded in a liquid venue. And these typically are very future-proof assets and their infrastructure. So I think that is where things are going to head at. At Aave, we want to serve pretty much everything as an infrastructure, but we also want to be opinionated on the future and what we want to like sort of a package and distribute to all the way to the consumers. And I think what we want to distribute is a better quality of yield, and I think that matters more. People are, people kind of like don't like the traditional finance, not necessarily because of these institutions and whatnot, and pretty like corporatism, but because you see governments getting more and more into debt. You see government shutdowns. You see basically the appreciation of a dollar. You see inflation in different countries. You just see a lot of kind of like a signs that the economy isn't really functioning at its most sort of a value preservation way for the people. And I think being able to bring a product into everyone's sort of um, 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 accessibility, where you get better yields but also better quality, is far more appealing than lending into this sort of old financial system.
So I want to ask you, Stani. So this is a part of our Aave dashboard here, and one of the drivers that we've got listed around the token is like, even if you just looked at the price of Aave and ETH over time, they're highly correlated, perhaps because of this like kind of legacy use case, or maybe not legacy, but the original primary driver being people wanting to get long on their ETH. I'm curious how you see that potentially evolving in a world where RWAs become a larger and larger percentage of the overall activity across the Aave platform. And I within that same vein, I've been wondering myself lately, are RWAs counter-cyclical? It doesn't really make sense that they'd be very pro-cyclical in the same way that crypto has in the past. I could see in a way they're counter-cyclical. Like right now, there's the borrow cost for something like USDC or USDT on chain is super low, like 2 or 3%. So I could actually see arbitrageurs moving in, and in some ways RWAs and capital could be countercyclical, or it could just be on a completely different trend line than anything else in crypto. And I'm curious how you see that growth and structural trend line, and then how that might influencing, or maybe decoupling, things like Aave from the growth of Ethereum, which have historically been very tightly correlated.
Yeah, I think the more Aave as an infrastructure can serve traditional assets, tokenized assets, and beyond one asset class, I think that puts Aave into a very unique category. Um, Obviously, we're doing it already now, but in a very small scale compared to these native crypto assets, and that correlation will show. And obviously, another interesting path is that after the Aave Will Win proposal, Aave is not only generating revenue from the protocol, but revenue from the product layer, which can expand a lot of the utility. For example, one part of the Aave app is actually a Aave card. So anytime someone is actually spending with the card, that generates revenue into the Aave DAO. So I think over time that will happen, and especially more of these assets are coming in. DeFi itself peaked at over 200 billion in 2020, and then again 2025 last year again 200 billion, and it's heavily correlated with crypto and Ethereum. And I think once we get towards a place where there's sort of like flippening between RWAs and native assets, then it starts to sort of like a change. The momentum starts to change as well. And I still want to say that I'm actually quite bullish on native crypto assets. I'm bullish on Ethereum, and I'm bullish on Bitcoin. I do think there's going to be in the future um, more of these native work tokens, because it is an open innovative space. So I would say, like, there's still gonna happen, and new things are gonna come up. But at the same time, I think the future is tapping into all sort of value that is tradable and can be used as a collateral in Aave to produce yield. I think that's the future.
Stani, what's your take on RWA looping? I feel like this has really taken off. I mean, this was a big driver of Aave's TVL in the beginning, right? It was looping things like Steth. And now people are extending that, and pretty logical line of reasoning from my perspective, which is a lot of the activity in Aave are RWAs now. There are these unique sets of challenges, like if you're going to collateralize a real world asset, the tokenized version doesn't necessarily represent true legal ownership. And so, you can't, unwind it atomically in the same way that you might do Steth. So it's kind of this very large and sexy market of, levering up and getting additional yield on safe or low yielding RWAs, but at the same time, it presents some complications. But I'd imagine, it's an interesting driver potentially for activity on Aave. Like, what are your thoughts on RWA looping?
Yeah, the RWA looping is going to be the probably the most biggest use case of Aave by far. Just an example, if you take the solar example, we take a solar portfolio of 1 billion, put it as a collateral in Aave. We can borrow very high LTV. And you can also have different compositions. So solar farms, for example, compose of 70% of senior debt typically and 30% equity. So you can split them into two different portfolio collaterals that can be used in Aave for the risk parameterization. And you can take the liquidity from Aave, reinvest into the same asset class to expand, build more solar farms, and loop this strategy. And because the nomination is pretty much the same, there's no volatility there. And at the same time, it's backed by the asset, which is the infrastructure. And typically, solar farms have power purchase agreements between 10, 15 to 20 years that generates cash flow down the line. So that is an example there, but you can apply the same strategy in these other assets. So as long as the borrow cost on chain is cheaper than the PNL or the yield that is coming from the RWA, you have this arbitrage opportunity. In traditional world, it's called leverage, and we call it looping, but it is going to be a way to actually scale Aave. But why I'm excited about that is not because it allows some sort of optimized yield. I'm excited about it because it can advance the future that we're heading towards, anything between 10 to 15 years by using DeFi. And a lot of these RWAs that are getting looped will end up in DeFi. At that point, DeFi will prevail because it has a better cost structure. You can aggregate capital much more seamlessly. You can then use that capital into these opportunities. And if you think about, like, Aave has sort of service providers and whatnot, but it's extremely lean. When you compare it to a bank or traditional financial rails, liquidations happen automatically. All these calculations of interest rates, heavy lifting happens by smart contracts. So the cost structure is just far more better than in the traditional finance. So eventually that will just replace the traditional infrastructure and takes the benefit for all categories of assets.
Yeah, I'll show one more visual here, but there's we've done a pretty interesting breakdown here of net interest income that Aave generates by different assets. I have one more question for you actually on net interest margin in general. It's also something that we track looking back. It's kind of fluctuated here between around 0.5% to 1% and 125 basis points. What is the driver there, and how much do you focus on something like net interest margin? Like, if I'm just looking at the different sources, it feels like Go, in particular, has a very high. Maybe that's kind of driving the spikes. But yeah, how do you think about the importance of net interest margin for Aave in general, and what kind of drives that for you?
It's a really fascinating question because margins are very important. But as basically Jeff Bezos said, your margin is my opportunity, right?
Right,
So
right.
I think the same applies in DeFi. So when you compare to traditional banks that are, maybe poorly managed, maybe they're in scale, they might have higher margins, but they also have that vertical integration um, and a very legacy client base. So I think as a technology as DeFi is, for DeFi to win, it has to offer tighter spreads, tighter margins. But the biggest difference about Aave is that Aave doesn't compete with, for example, banks and financial institutions. It is a cost structure architecture for them to replace the old with new by providing a more efficient business. And when we look at, for example, centralized crypto lending today, there's still legacy lenders there. So after the FTX and Genesis lending collapse, they're lending out at between 7 to 12% against Bitcoin and Ethereum. DeFi does that 5% and below. So the efficiency is already there. So at a theoretical point, you should always borrow from DeFi, never borrow from like a brokerage. There is of course like different constraints. and so forth. So that is just showcases what is coming from these towards these traditional assets. And then when you get to a scale where Aave is servicing like hundreds of banks and financial institutions or thousands at the same time, you get the economies of scale, and that's basically where the profit compounds. And then obviously there's you're right about Go, because Go doesn't have in its main facilitator an LP. The LP is effectively the Aave protocol. So the margins are far more greater because you don't have to pay for LPs. There's still certain pools where you can do that, but it is very interesting because it is a business line that is high margin and growing steadily. So I think Go is going to be a big part of the story of RWAs, a big part of the story of basically funding abundance, and overall, it's going to be a way for the Aave protocol to basically collect higher margins.
Yeah, it's been growing pretty steadily here. So, yeah, very exciting stuff, Stani. And yeah, I feel like there's almost so much going on. I know we got to wind down here, but where if folks want to find out more or catch up on the latest of everything going on with Aave, other than of course seeing you speak at DAS, what's the best way of doing that?
I mean, I obviously I love DAS, and I recommend everyone to go there. It's going to be a really exciting year because there's so many people coming also from the
Yeah.
TradFi and also a lot of from the sort of a native space as well. So I'm going to be there. You can follow me at Stani Kulechov and any updates that we have, or follow Aave's account for regular updates as well.
Amazing. All right, Stani, appreciate you, my man. Congrats on everything, and we'll do this again in a year or so when Aave is fully taken over the world and regroup.
Excited. Thanks, Michael.
Cool. Take care.